On the income front, it's really hard to find opportunities. A lot of these companies that are yield sensitive have gone vertical. I think the market's already pricing in cuts in the money market. So if the RBA cut, you're just meeting expectations of the market. So I think the payoff for these yield stories is, in my view, asymmetric. I think there's more risk to the downside than the upside because the market's already pricing in cuts. I think potentially global growth picks up, which will push interest rates up and will have a negative effect on these yield stories. So I think you've got to be really selective in finding yield, as they're very much bond sensitive stocks. So to find opportunities now, again, you're looking at cyclical companies like resources, which generally aren't yield stocks, but they're paying fantastic yields with buybacks. They've got excess cash. They're not spending their money. So at the moment, they look like a really good bet. If you believe in global growth, you buy these stocks because they've got yield as well and you've got growth as well. So in my view, you've got a better return profile than the yield sensitive names, which are already at extreme valuations. In the short term, essentially they can. Have they changed their spots? At the moment, they're listening to shareholders. There's always an innate urge to spend the money because no one wants to stand still and hand back capital and divest and shrink themselves. So at a point in time, I think that mantra around capital management will disappear because at the moment they're being rewarded for that, but there'll become a time where people will start talking about growth again. And that's probably 2 to 3 years away, but I think then the conversation will turn around from shrinking your investments and capital management back to growth, because there will become a point where people will start turning back to growth. So I think in the short term you're safe, but medium to longer term, I think they do go back to their old ways, because they'll see the pipeline and realise they have to replace a lot and move a lot of their activities around from metals and resources that don't like coal, and move into the new age metals. So that's very much a focus of these companies, but we're not there yet though.